Tesla stock is down from its all-time high about 18% or so. At one point, the stock was down 20%. But this is going to look like a blip soon. What Tesla is doing, the Wall Street analysts don't even understand. Wall Street in general they really don't understand what Tesla is doing and where Tesla is going. And in today's episode, we're going to talk about that. We're going to talk about what Tesla is doing, how you might see Tesla's businesses evolve throughout this year. Now, we do have some big catalysts coming this week, obviously NVIDIA earnings, and there's some key data points that I want to talk about in today's episode alongside the broader markets. And really all it's going to take is a little bit of risk appetite to come back into markets, and Tesla stock could see a pretty aggressive move higher. Hit that like button as well as subscribe to the channel, and let's begin. Now, what I mean by analysts and Wall Street don't understand what Tesla is doing at this point. Tesla is in a scaling phase for Robotaxi. Okay. For Optimus, very early innings of course, getting closer to production on that thing. Hopefully production by the end of this year. But specifically with Robotaxi, this is a unit economics problem that Waymo faces. They're not able to compete with Tesla because they don't own the cars that they are putting the software on. That's the first part. Okay. Waymo, basically, I mean, it's Waymo. There's nobody even trying to win in the Robotaxi space at this point. Zoox, or is it called Zoox? Zeus, whatever it's called, the Amazon one, like that's not even a thought at this point. Waymo's like the only real competitor to Tesla, and their unit economics make absolutely no sense. What that means is they're not able to charge a reasonable rate to make a profit. Okay, if you owned a mansion and you wanted to rent that thing out on Airbnb and you wanted max capacity, you're probably not going to be able to do that at $5,000 a day or $2,000 a day or even $1,000 a day versus somebody else that has the house next to the mansion that's more reasonable and they charge $200 a day. It's probably going to be easier for that, smaller, more reasonable house, maybe a nice house, to be rented out at max capacity and have a lot of demand and turn a profit because of the price point. Consumers are ultimately, they ultimately judge what they like based on price, right? And how much demand they can consume of a product. Imagine it, there's always a debate between Coca-Cola and Pepsi, right? Which one's the better line? And pricing on both of those is pretty comparable. So you think about, the taste and whatever. But if Coca-Cola was twice the price of Pepsi, all of a sudden a lot of Coca-Cola drinkers would start to like Pepsi. Okay. I know it's kind of crazy to think about Coca-Cola and Pepsi in relation to a self-driving network and competitor, but that's exactly what you have right now between Tesla and Waymo. Tesla at this point, their economics for Robotaxi are almost no comparable to Waymo, right? Waymo, they're operating their cash intensive business with $250,000 cars, $200,000 cars, right? All things included, the LiDAR, the radar, the sensors, the actual software to allow a Waymo to be autonomous. Tesla, they're going to have a $20,000, $25,000 car with the hardware included in that. Waymo will never be able to get to those prices. What that means is Waymo will never be able to have a pricing structure like Tesla. They could try, but they're just going to burn more and more cash. Long term, it's never going to happen. Okay? They're never going to be able to turn a profit. Ever. They're just never going to be able to. Okay? Not with Tesla breathing down their back and able to lower prices. Tesla's average Robotaxi ride, in the data that came out a couple of weeks ago, was less than $10. Waymo's? About $30. There's no competition when you have a similar product that can undercut another so much. Why would you spend $1,000 for an iPhone if you can get an iPhone for $500, right? You wouldn't do that. Okay. So that's the first area that Wall Street just doesn't understand right now. The other aspect of this is the scalability. Okay. Tesla's software gets better and better and better by the day. And we have seen a dramatic evolution in FSD's progress in just the last year or two, right? It's went from a novelty to something, once you try it, you can't really, or you don't want to go without it, right? It's so good. You could, don't do this, but nearly sleep at the wheel. Do not do that, okay? But you know, there's some people that do crazy things like that. Okay. Tesla is at a point where the software's almost there to be able to operate in any condition, anywhere, and never have any issues. Once the regulatory approvals start to come in, with Tesla's unit economics, I mean, you could argue 7 to 8 times cheaper than something like a Waymo. You're going to see demand pick up exponentially once consumers obviously realize, oh my gosh, Tesla has a Robotaxi service, right? And you're going to see Tesla able to bring in profits with the Robotaxi, I think, pretty quickly. You know, a lot of people are used to like the Amazon-esque, S-curve, where you invest for decades and then finally you're able to bring in a profit. I think the Robotaxi could be scaled and continue to be scaled in a way that the unit economics of Cybercab could allow Tesla to start generating profits a lot faster than Wall Street is assuming. Tesla stock today is a $400 stock instead of a $1,000 stock because Wall Street, they don't think the Robotaxi is going to scale that fast, number one. And they don't think Robotaxi is going to be able to turn a profit that fast. Well, what if next year the Robotaxi could start to generate a profit? That would be pretty incredible. Okay. We're expecting about 5,000 Robotaxis to be built and hopefully deployed this year. We'll see. A lot of that depends on the path of regulatory approvals. We're expecting, half a dozen cities to begin Robotaxi operations in the first half of this year. What about the second half of this year, right? What about next year? You could be looking at 30, 40, 50 cities by the end of next year. You could be looking at, maybe 50,000 Robotaxis. Maybe 30,000's more appropriate. Maybe it's 50,000. Maybe it's 100,000. Ultimately, we'll know once we get there. But with those kind of numbers, you could actually start to generate a profit in a hyper growth new business for Tesla that's going to grow in a hyper growth phase for years or the next decade. You're effectively like at the point Tesla was at in, 2008, 2009, just beginning to scale, just like literally at the beginning of the process. It took a while for Wall Street to catch on to this, right? But when it does, it tends to happen quickly. And I think this year could be one of those moments. Okay, let's face it. The consumer has been in a recession for a very long time. I would argue since 2022, the consumer has been in a recession. Whether you look at credit card, 90-day plus delinquencies, nearly at all-time highs. Like higher than 08, 09, or at a similar level to 08, 09. Auto loan 90 plus delinquencies are higher today than they were in 2008, 2009. Right? That's crazy. Okay? To say the consumer is not in a recession with numbers like that is asinine. You're an asshole if you say that. Okay? You don't understand what you're saying if you think the consumer is not in a recession right now. Well, the big beautiful bill provides some help. Okay. People are going to get a couple $1,000s more back on their taxes. Okay. Among like being able to write off auto loan interest and other changes as well. This is going to make a big deal for the consumer. It's going to allow the consumer to either pay down debt. I'm hearing anecdotally from a lot of people they're going to pay down debt and they're going to buy some things with their taxes that they're getting. You know, I'm hearing people that got, $1,000, $2,000 back last year that are getting $5,000, $6,000, $7,000 back this year because of no tax on tips, because of no tax on overtime. Okay. Up to, 25,000 for no tax and tips, up to 14,500 on overtime. That's a lot of money that people are going to save. Okay. So I would be willing to bet the consumer gets a little stronger here. Maybe that could help out Tesla's demand in the near term, but it's going to help to quell those recession fears. And I think Tesla would be a $600+ stock right now if it wasn't for fear about the consumer, fear about a recession, fear about, what's going on in software and tech and all of that. Tesla has no part of that, right? Tesla, especially the whole AI software tech fear. Tesla is irreplaceable by AI. And I think that is one reason why Tesla has held up a lot better than some other stocks, right? Tesla's not in the software theme. Tesla is not replaceable by AI, but Tesla has still come under pressure alongside, I think, a lot of what is algorithmic selling in this market. If we do see this week, markets can kind of start to get over that. I think we've cleared a lot of hurdles, whether it is the Supreme Court ruling on Friday, the GDP report on Friday, which again shows net domestic investment actually pick up for the first quarter following 3 declining quarters in a row. That only happens before a recession, almost always. Once you get 3 quarters in a row of declining net domestic investment growth, you're getting pretty close to recession. Well, the latest quarter, you did see a bit of a rebound. You could call it stabilization. Okay. I think that eliminates some of the fears as well. After you get NVIDIA earnings, with how many bears are out there on this market, a put on the SPX is 20 times more expensive than the similar call. Go 1% out the money on the call side and the put side. You're going to find the put is 20 times more expensive than the call. Nobody's bullish right now. In fact, I think Tesla has held up very well in this environment when nobody is bullish on tech or software or anything risk on. In the next video, we're going to break down what areas of this market have been doing well, and it's the recession trade. On Friday, that started to flip-flop a little bit. Okay, and I do think that will generally continue. We do have NVIDIA earnings this week. Obviously, that's going to be a big catalyst. But by the end of this year, assuming nothing goes awry, there's no crazy, black swan events, we do have the midterm elections. Okay. Historically, what happens is markets rally aggressive, okay, after the midterm election. Well, by then you're going to have Tesla in a dozen cities operating robotaxis. You might start to hear more about the unit economics that, by themselves likely to be profitable, right? It's probably going to be one of those things where, the robotaxi is like you know, gross profitable, but not net profitable. Like if you include the R&D investments into like chips and all of that, then the robotaxi is not going to be profitable. But the robotaxis by themselves are probably going to be profitable. It would be hard to imagine how a $25,000 vehicle doing maybe 10 robotaxi rides a day, maybe bringing in $100 in revenue a day, would not be profitable with those low of economic cost. But if you obviously include the investment into chips into that or some other, energy infrastructure, then maybe it's not net profitable. But Wall Street, my point is, they're going to start to see the path here into the second half of this year and start to go, wait, maybe we're at the start of a decade or two expansion of robotaxi that is going to balloon Tesla's profitability. Nobody's even thinking about that yet. FSD is kind of like a novelty to a lot of even analysts at this point. Like people aren't really serious about robotaxi, right? Even like some of the bullish analysts have really low expectations for the robotaxi on a, how many vehicles are going to be deployed kind of basis, but also profitability basis. Nobody's even talking about that yet. And I think if we do get some responsible, scaling, which honestly, I think just the unit economics of what Tesla is doing shows how responsible Tesla actually is about their business, right? They could have done robotaxis in a Model X, right? It's the biggest Tesla they have, but why not, right? Tesla is very methodical in the way that they are executing this, robotaxi network. And I think Wall Street's going to start to figure it out by the end of this year. And that could do a lot of positive for Tesla stock. Obviously, not to mention Optimus by the end of this year is going to be a massive deal, right? Hopefully, I think Wall Street will pick up on that one pretty quickly. But around the same time as Tesla is beginning production of Optimus to be sold on a commercial level, you're going to have FSD operating in a dozen cities doing, thousands of robotaxi rides a day, bringing in a couple $1 million of revenue a day with a clear path towards scalability. And Wall Street right now, they're not even thinking about that. Like that is not hyped up. That's not even really in Tesla's numbers. Nobody's really thinking of Tesla as this behemoth AI company they will become. And that's going to be a mistake by Wall Street. And I think, again, I've said this for a long time now, I think Tesla's going to be the number one performing stock in the S&P this year. I think it's going to be everything else in the S&P. I think Tesla's going to be a $900 stock by the end of this year. And my conviction in that has only grown, especially given how weak the markets have been recently and the fact that Tesla has excelled, right? Relatively speaking, right? Tesla has done very well versus software, versus tech, versus consumer, cyclicals and banks. Tesla's done very well, and that's not something you normally see. Normally, Tesla's going to be, like historically, an underperformer during risk-off environments. And that's not really happening right now. So, all of this is great. We do have big catalyst coming this week. We'll talk about those in the next video that could stir up a lot of volatility. I mean, there's a lot of bears out there. The dealer gamma just plummeted. So what that means is there's not a lot of options on the S&P in the near term as people begin to make their bets, bullish or bearish. That's going to stir up a lot of movement out there on a single stock basis like Tesla and also on an index basis like the S&P. Hit that like button, subscribe to the channel. Let me know where you think Tesla stock is going to be by the end of this year down below in the comment section. Have a great rest of your day, and I will see you in the next one.